It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 26, Episode 2 in the aggregate, that's Episode 152, starts here. Well, let's say, first of all, thanks for the LinkedIn hat tip, Lynn Martin. Liquidity begets liquidity is the parish maxim, akin to the cephalogical laser focus. It's the economy, stupid, championed by James Carville as he helped steward Bill Clinton to a popular Democratic presidential victory all those years ago. Arguably, indeed, liquidity begets liquidity is even more acute. It's like gravity, as memorably surmised by Douglas Adams in The Hitchhiker's Guide to the Galaxy. The ships hung in the sky in much the same way that bricks don't. Suffice it to say, the competitive mirage of Euro-stir derivative market share remains akin to the Loch Ness Monster of derivatives fables. If you don't follow what we've been talking about, check our social media, and indeed, check out what we've been saying about this in Exchange Invest at exchangeinvest.com, the daily bulletin of the Bourse business. In case you missed it, total ICE interest in Euro-stir curve products is over 17 million contracts of open interest, a hefty liquidity curve where the leading competitor, well, will spare Frankfurt any blushes by naming the platform. They have barely 300,000 lots. Nevertheless, that wasn't the shock of the week in markets this week, ladies and gentlemen. The shock was Indian authorities have ended their colo investigations concerning the NSE and many of their managers dating back to 2019. Meanwhile, we had a case of markets lawfare and, alas, only brief action. That was the story of Kalshi's court win to get legal political prediction markets running in the USA, only to be stymied by CFTC lawfare. That said, the pendulum is swinging away from the Benham CFTC era, and it looks as if Kalshi and ForecastX will soon be operating transparent political markets alongside the opaque world of political donations. ForecastX, incidentally, is powered by our guests today. However, we've got one final mega story of the week to review, and again, we're back to liquidity begets liquidity. Liquidity begets liquidity one more deja vu time as IEX enters the US options market as the 19th exchange in the booming exchange business. At this rate, the OCC board will soon be even larger than the CME Group's Supreme Soviet. All the best to Brad, Ronan, and all the Flash Boys on their new mega opportunity. All the insights into why this matters were in this week's Exchange Invest, the exchange of information and water cooler of the Bourse business. Our guests today, ladies and gentlemen, Maureen Downs and Jim Downs. The topic, the future of exchange matching engines with Connamara Technologies. Maureen is a respected capital markets veteran with broad industry experience in derivatives, financial instruments, and financial technology, including leadership roles at brokerages, trading firms, regulatory bodies, and trade associations, including chairing the NFA. And I'm delighted to say I've known Maureen all the way back, more than 20 years when you were working for the great Rosenthal Collins Group, which you went on to lead. Jim Downs is co-founder and chief executive officer of Connamara Technologies. He revolves around the EP3 matching engine, of which we'll hear more later, which encapsulates his extensive knowledge and experience from decades of delivering capital market software solutions and trading on the floors of both CBOE and CBOT. Greetings, Maureen and Jim. Welcome to the show. You're on IPO-VID live stream. Where in the world are you today?
We are in Salt Lake City, Utah, in the United States.
Wow, an interesting place to be, not far from the Bonneville Salt Flats, of course. That's a place of great interest, all known petrolheads, although tragically depreciating at the moment. I mean, they set up that new salt factory quite close to it, and I think there's some worries that the Salt Flats may not be able to even host their mythical Speed Week in the near future.
Well, I hope that doesn't happen too soon because I'm destined to be out there and driving on them. So I want to make sure that stays at least while we're out here.
How fantastic. And have you got a car in mind already?
Yeah, we have a Porsche.
Oh, lovely. How fantastic. What a wonderful day out, ladies and gentlemen. The Bonneville Salt Flats being famous as a place where many Worldland speed records have been set. I think supposedly, well, I think the fastest was Gary Gabelich in Spirit of America, although I do believe Stan Barrett also broke the 700-mile-an-hour barrier, but only did it one way and therefore didn't qualify for the world speed record. Enough petrol-headed nerding, or indeed, I suppose, kerosene-fueled nerding in the case of those jet cars. So tell us a little bit about yourselves, Maureen and Jim. Maureen, first of all, to you. How did you get into financial markets in the first place?
Well, my roots go back pretty deep, down early to the early 1900s, when my grandfather started as a runner on the Chicago Board of Trade. That was at the tender age of 14. He went on to be a very successful broker and trader in the grain complex at the Board of Trade. And then my father and my brothers followed him into the business. After university, I didn't follow into the family business. I tried my hand at quite a few different things. I started as a certified public accountant. Then I went to law school and I practiced law. And then I was in corporate finance doing mergers and acquisitions. But pretty soon, siren song of the markets pulled me back. So for about 35 years, I was involved in the derivatives business in almost every aspect, in trading, in brokerage, advocacy, regulation. And then in 2022, January 2022, I turned my attention full time to the company we founded, Connamara Technologies, and our EP3 exchange product.
Fabulous. How fascinating altogether. It's one of the most incredible things. I mean, dating all the way back to 1848, the foundation of the Chicago Board of Trade. Coincidentally, the last year, mainland Europe had a food blight. An interesting statistic. Was it the responsibility of the Chicago Board of Trade trading all those grains that stopped people starving to death in France and Germany? I wonder. Anyway, really amazing the many dynasties that we have through this whole market. What about you, Jim? How did you get into financial market?
Well, it was kind of happenstance, I would say. But you have to take my origin story in capital markets back to when I was at Purdue University studying electrical engineering. I had to take a course on personal finance, and when that personal finance course was just really an easy A, and you just learn about how to balance your checkbook, what's the stock, what's the bond. But the curious thing is that they had a section on equity options. And at that time, I think the CBOE, the Chicago Board Option Exchange, was 5 years old. So for them to have that in this course was kind of weird. But I was attracted to that. That was just something that, for some reason, that the concept of an option on stock would just appeal to me. I kept the interest in it. Well, I graduated. I went to work for Honeywell up in Minneapolis, and then I worked for this little government agency in Langley, Virginia, called Central Intelligence Agency for a bit. But during that time, I was always kind of researching what stock options were. Most importantly, how you value them, which was awesome for an engineer to understand there was a thermodynamic model that you can model the value of an option with. That was just fascinating to me. So during that time, I looked at that, and during that time, we also got married, which was a pretty momentous occasion for me. But we took in 1981, we took the leap to put me on the floor as a market maker on the CBOE. So I took what I've been teaching myself on stock options and applied it. For the next 17 years, I was a market maker, an independent market maker on the CBOE floor. And then I was also a member of the Chicago Board of Trade as well, and traded a few corn futures here and there. But during that time, going forward, that I was always writing my own software models, my own risk management models. And 1998 then comes along after 17 years, and there was two things in Chicago capital markets that was going on at that time. The environment for independent market makers on the Chicago Board of Options, the Chicago Board Options Exchange, was becoming very challenging for various reasons. But the exchanges were also moving from open outcry to electronic trading. So we again took another jump and founded Connamara Systems then to provide custom application development to capital markets participants. So I knew a little bit about writing software. I knew a lot about trading. It's kind of right place, right time for me. So we made that move. During the next 25 years or so in that company, running that company, and still operates today, we had repeat customers coming back to us for us to build exchanges for them and matching engines for them. And several years ago, Maureen and I decided that maybe there's an opportunity for a product in this. And so we actually created an internal project to build EP3, which is the exchange platform. And we brought that forward really in 2022 when we formed Connamara Technologies for the purpose of further developing the exchange platform and marketing that product.
That's fabulous. What an incredible story. And you hit upon a great nail there, all the way back in, what, 1973. CBOE starts trading Chicago Board Options Exchange. The one thing I always love in history is the fact that it's only in, what, 1974 or really into 1975 that Mr. Black and Mr. Scholes' model starts to get popularized, because they don't even publish it for another year. So, which seems utterly incredible that the whole options market existed. And I have no idea how anybody priced an option at that point in time, but obviously the answer is with great difficulty, because there was kind of the binomial model, which I don't believe anybody could ever do in their head, even if their head was the size of a planet. And yet you look at it these days, and here we are, 19th options exchange coming into the market. The only thing that everybody said consistently is there's too many options exchanges, and they said that with what, number 4 when it was ISE. And here we are, a huge market that's just taken off around the world, and well, thanks in many ways, of course, to Messrs. Black and Scholes. So a fascinating business built in technology. Very, very interesting. Let me just quickly swap over to, we got a couple of comments coming through on the wires. I see the wonders of live stream. First of all, actually going to go to one that has appeared on our LinkedIn stream from LinkedIn user. That would be Beata Young, I do believe. Congratulations on your amazing career. Hashtag woman on it. Hack the future. My masculine intuition tells me that message is for Maureen, Jim. I hope you're not offended. That's wonderful altogether. It's great. No, it's seriously, it's fantastic to see, female IT participation demonstrating the future of technology. And you guys, I mean, gosh, I've got to praise you here almost for being almost un-American in the current vogue. I mean, I'm trying to calculate this, but it sounds to me like you must have been married when you were embryos. It's that many decades. It seems to be quite a long time.
Yes.
We were pretty, well, yeah, we were pretty young.
Yeah.
I mean,
it's 44 years.
Yeah, it'll be 44 years. It'll be 45 in May. Yeah.
44
I proposed to her on our second date, by the way.
Well, and in fact, that brings me beautifully to Rishi Rator left a message on LinkedIn. He said, seasoned professionals set high standards. Remarkable synergy expected, Patrick Young. I think that could summarize your marriage as much as it could EP3 and the Connemara success since then. It's fabulous. So tell us, I mean, talk to me a little bit about, let's also actually, delve back a bit into your history, because not everybody may be aware of what Connemara has built. And in fact, you know a great deal more about what Connemara has built, because a huge amount of it's been private and behind closed doors. So therefore, we don't actually know the full extent of your client list. But there have been some very, very public success stories of markets and platforms that you've built in the past. I think it's quite fun to maybe share one or two of those with us, please.
Yeah, I think that's right. Why don't you start with, there's a couple examples, and I think we're going to talk about two that are really very, very different in style and what the requirements were. Why don't you start with the materials exchange?
Yeah, so a really good example of a platform that we built was a company called exchange called Materials Exchange, and they were spot lumber. So it's 2x4s, sheets of plywood market. The founder of that company came to us and had been trading in that market for a number of years, but it was a call around market, so no price transparency, no price discovery. And he thought that this was a market that was ripe for disruption and putting the market on the central limit order book. So we agreed, and we thought it sounded like a great idea, and it actually turned out it was. The curious thing about that is that when you bring a new asset class forward into the electronic world, you try to have model, how does the market work today, and so you don't disintermediate anyone. So one of the things in the spot lumber market is that the seller is typically a sawmill or something like that, will get a price. They want a price for their 2x4s. The buyer, which may be a lumber yard or some large materials supplier or construction company, they always had to pay the freight on the when they buy the lumber from the sawmill, because the freight is very expensive. It's very heavy. But that means the buyer sees a different price than had to see a different price than the seller. That's complication number one. Complication number two different buyers can see different prices depending on where they're located in the country, because the freight would vary. So adding the freight into that equation was a complication, but we were able to do it. EP3 was able to handle that sort of new paradigm. When I envisioned EP3, it was more like buyer meets seller, same price, everybody seems the same price. But this turned out to be more like kind of like an FX market in a lot of ways. But we were able to pull that off, and we're pretty proud of that.
Fascinating. So that was materials exchange. And tell us, what was your other example?
Well, I'm going to talk about ForecastX. That's certainly one of our newest EP3 clients, one of the most innovative. ForecastX is a wholly owned subsidiary of Interactive Brokers. They are a prediction and event market. They're licensed in the US as both a DCM, which is a designated contract market, and a DCO, a derivatives clearing organization. So both as an exchange and a clearinghouse. What they do is list contracts on a wide range of economic and climate events. They would be things like a monthly U.S. unemployment rate. It could be an average global temperature. It could be the U.S. government sovereign debt at a point in time. So what happens is a trader can either buy a yes or buy a no contract, depending on their view of how likely the event is to occur. So something very different, very unique, and in some ways elegantly simple.
Yes, it's fascinating. I mean, you look at the whole market structure, very, very different elements, because there's no real issue in terms of the deliverability. I mean, you're just going to go straight into the DCO at PredictX and settle, whereas materials exchange, actually pricing the wood is one challenge, trading the wood is not so much of a challenge, getting it to the customer coherently is a huge challenge for the whole business, which makes it very, very different. And I think it's also intriguing, and obviously it's got to be a huge tick a feather in your cap and a huge box tick for you guys, which is being chosen by Interactive Brokers, founded by Thomas Peterffy, who's perhaps one of the greatest technological boffins ever, who managed to do, and I mean this with no disrespect, but I mean, he had effectively 400 options traders or something around the world when he was running his market making business, all electronically connected on floors in electronic markets. I mean, this is someone who really gets technology. For them to walk in and say, we're going to choose you, Connamara, is surely a fabulous advertisement for the business.
Yeah, I know from my own experience competing with them on their market makers on the CBOE floor is one of the reasons we started Connamara Systems. So they were a driving force in that market, and they continue to be today.
Yeah, I mean, Thomas Peterffy is a success story in our industry that really it's hard for anyone to live up to Thomas's story. A visionary, an incredible mind, and all you need to look at is the success of Interactive Brokers globally to know what kind of visionary he is.
Yeah, and being chosen by Interactive Brokers on this project in ForecastX was a real validation for what we were doing for us. We really
it's an incredible validation of your business. Really, really sensational. I mean, Thomas Peterffy, a huge success story all around. And I mean, quite the achievement, because he's one of the men who moved from Connecticut to arrive in Florida. And I think he's still ranking in the 10 richest men in Florida. And that's one heck of a competitive market to be amongst the 10 richest people in Florida, given the fact that you've got people like Jeff Bezos in there for starters. I mean, that's a serious achievement and it's a serious achievement given the fact that a lot of that money comes nowadays from options markets and trades, where he's basically getting nickels and dimes in commission all the time through his electronic network. So yeah, I mean, that's really, really interesting. I wanted to ask you about another fabulously colorful, wonderful character. He's been a guest on the show previously, the man who really gave us financial futures. You've had a fascinating history working with Richard Sander in his environmental markets, where you were really pioneers in providing his technology as well.
Yeah, we've known Richard for a long time. Maureen actually knew him probably before I did. But when he started Chicago Climate Exchange, he called up Connamara Systems because he knew us, knew Maureen, and then knew me. and
That's 2004.
That's like 2004, yeah. So 2000, yeah. And the so we built that market for him, and he's just he is so intelligent that you walk into the room and you immediately start sweating because you gotta have the right answers for Richard. And it's but he love him, and he's been, I guess, with Chicago Climate Exchange. That was our first matching engine and exchange platform we built for them. And that really kind of kicked off this idea that back then that we should maybe consider that there was something happening in the marketplace. I always say that when you stood on the floor, you could tell a tone change in the market by the way the voices you would hear. And we started seeing that. We started seeing that as far as matching engine exchanges, and started with Richard.
Well, and then he came to us again
for
American Financial Exchange.
Yeah, which is still operating, today. And that was such an innovative product. And what was really interesting about Richard's desire for that product was that he definitely wanted to bring an American index to the middle tier and lower tier regional banks that they could price their debt off of. He wanted it to be an American index, and most importantly, he wanted it to be based on transactions and not a call around of saying, what do you think LIBOR should be today? That sort of thing. So I thought that was pretty noble of him, wanting to really help the American bankers that way.
I think it's fascinating, actually. I mean, the extent of his genius seems to have no bounds whatsoever. I mean, he manages to run the gamut of having been right in the very earliest days of talking about trading sulfur and things like that, which, let's face it, was such a success that nobody talks about acid rain anymore. I mean, that's pretty good as a starting point. And then he got into the whole business of carbon markets, and you look at how many people are going to be at UN Climate Week next week, and they're all going to be talking about carbon markets, and they're 20 years in the stead or more. I mean, he was talking about this stuff at the turn of the last century and before it. And then, as you say, I mean, the interest rate markets are quite incredible. But also, what I think is so fascinating about the FX is how that identified a market failure within something that is traditionally super liquid, the US dollar and US dollar interest rates. And yet he went out there and he said, US dollar interest rates really, really work as a derivative for effectively the top 10 or 20 megabytes banks in the USA, but the other 500, 1,000 banks and S&Ls and other financial institutions are essentially involving a great deal of kind of waving around in the air, their thumbs having licked it to see which direction the wind's going in. And that was what's so interesting, because that's such a factor in the development of markets. And therefore, I suppose it's interesting. So you've demonstrated that EP3 has got variability, that it operates across all things. Perhaps you can kind of give us a little bit of a higher level view and walk us through what the sort of suite of technology you have, so that people can understand better the Connamara offering.
Yeah, so I'll take that. Sure. So that the higher functional level, there's a matching engine, right? But there's a matching engine is not an exchange, and it's not an exchange platform. That's actually the easy problem to solve. Price time priority is pretty easy. So it's all the things that go around an exchange and the integrations and how that works. Anything from risk management to regulatory reporting to how do you operate the exchange day in and day out? What tools can you provide the exchange operator?
Market surveillance.
Market surveillance. Looking for anomalies in your market, because at the end of the day, the exchange is responsible for maintaining a fair and orderly market. That's their main. That's their main mandate. So it's all those sort of things. The technology is, built. If we want to get real deep into it, I can. But what I want to say is that there's two enabling technologies for new exchanges that's come on, in the last 10 or 15 years, and one is the use of the cloud, which actually turned a large capital expense into a variable expense for an exchange that's trying to get up off the ground. Back at Connamara Systems, I was on projects where the first thing the company had to do was to just spend a couple $1 million on data centers and servers and rack and stack them and get it done. The cloud allows you not to do that. The second enabling technology, which Connamara Systems had a little bit to go into, is our use of open source and open source software. And what maybe the audience needs to understand is that today it's pretty accepted in capital markets that open source is being used. I mean, there's messaging buses like Kafka and containerization and things like that. But back 25 years ago, open source was not used in capital markets. They were just starting to look at like Linux as for operating systems, but it was really looked down upon. And Connamara Systems actually created an open source product called QuickFix, which is a fixed engine a fixed library that's really heavily used today in capital markets. But those are the two technologies that allowed us to bring forward this. You put those two things together, the open source uses open source and cloud technology and cloud deployments. And now you've lowered this barrier to entry, and it's really enabling new exchanges to start with a lot less upfront capital.
And let me follow up by talking really about the functionality that what EP3 brings to the marketplace. EP3 is a fully integrated exchange infrastructure for exchanges and clearing. So this is a front to back, fully integrated technology, but it is built on a component basis. So the components that Jim talked about before, risk, market access, market surveillance, all those are individual components. Obviously, every single application has a matching engine. You have to have a matching engine as a core, but depending on the use of the product, and if you're in a non-regulated market, you may not need some of the modules. If you're in a regulated market, you probably need all of the modules. But it allows, the way it's built, it's allowed to take the components you need today, to add them easily later, and to scale, and just have a single place where you can get everything you need for exchange, clearing, and settlement. Traditionally, many new exchanges put together pieces. Sometimes they built some of the pieces themselves. Sometimes they bought other pieces. So today we find a demand, particularly among new exchanges, people who want to get up and running fast. They want to have one application they can deal with that's flexible, that accommodates their particular asset class, that's cost accessible, that's cloud native. So that's the product that we bring to the table today with EP3.
That's absolutely fascinating. And there's a slide there we've just been looking at about the growth of exchanges exponentially. And I want to come back and address that in just a moment, actually, because you raised so many issues to do with the multiple modules that I have. But I'm going to give you a break for just a second, because we're going to drop, ladies and gentlemen, into reviewing a few of the books of the week that we've been looking at during the course of the summer. The last 3 books that give us a chance to catch up after what was a frantic August of publication for EI Weekend, which of course comes out as a freebie macro read on a Saturday. Anybody can access that. Go to exchangeinvest.com. It's completely free to read. It's also on Substack and Medium, as well as indeed, of course, our daily subscriber newsletter, The Exchange of Information, Exchange Invest. So coming up first, FinTech for Dummies by one of our previous guests, actually Brendan Bradley, my dear old friend from London. This is a really highly readable tome, giving exactly what it says on the cover, the opportunity for you to manage to read all about the whole business of fintech, and a very, very handy, excellent read it is too. Then we have a story of human progress from Johan Norberg, also one of our previous guests. He was the man who was talking, of course, about the wonders of capitalism and markets when he joined us for an excellent IPO-VID a number of months ago. Open, the story of human progress, is a huge macro read that you'll find absolutely fascinating from start to finish in order to manage to get through the wonderful world of markets and more, and how they can change and improve society for the better. And then, well, perhaps most appropriate, as we've been talking about green markets just recently, and I know that a large number of people, including our Former guests such as Gordon Bennett of ICE are going to be in New York next week for Climate Week. Chasing Rainbows by Tim Worstel, himself a former guest on IPO-VID. Chasing Rainbows is how the green agenda defeats its aims, discussing the politics of greenery and indeed why there's cause for optimism and how mankind can actually manage to do great things to reconcile itself with the climate rather. Those are three of our books of the week, which gets us caught up to where we've been. We'll just have the one book of the week in the near future. Now let's return to our guests. If you've got a comment or anything you'd like to say or a question you'd like to make to our guests this week, Maureen and Jim Downs, please do so, ladies and gentlemen. They will be welcome. Also, give us a little love, because there's this thing called artificial intelligence, AI, you may have heard of it, and they use it on things like LinkedIn, YouTube, and Facebook, where we're coming to you live today. And you know what? A little love goes a long way, ladies and gentlemen, in pushing us up those AI algorithms. That helps us with IPO-VID, looking at the future exchange matching engines with Connamara Technology in order to be seen by more people. And this is a message we want to get out there. The importance of markets, the benefits of what can happen, and the uses of technology. So we were all modular just a couple of moments ago, Maureen. I think that's very, very interesting. You were talking about how all of these different units come together. And therefore, everything can be served as of now via the cloud, if I got that correctly. And therefore, you've got a very, very fast modular opportunity in order to scale up markets from the remarkably small to presumably the extremely large. Well, you've demonstrated that with the amount of trading that you've been doing on certain applications in the past. And I suspect, looking at ForecastX, that's going to be something, given the fact they're pouring in whatever it is, umpteen zillion clients of interactive brokers into that market. It's going to take off in the near future with great gusto. As you look at that sort of build process, you obviously have a lot of contact with different people around the world. We had that fascinating slide that came up briefly, maybe it can come up again, about the pattern and the path of new exchanges. And this is the bit where I get very, very excited. Walk us through some of the kinds of opportunities, without giving away any confidential data, that you're seeing in the way people are developing their marketplaces for the future, if you please.
Yeah. Well, I think we can talk about this range of tradable assets that people are coming to us without giving away too much confidential information. We've talked about events with ForecastX. We've talked about cash commodities with materials exchange. Of course, there are sports. There's carbon, and all kinds of variation on the carbon and environmental markets, as Patrick, you mentioned earlier. Small cap equities. Tokenized real world assets.
Yeah. Crypto infrastructure. Energy.
Sovereign bonds in some emerging and frontier markets. It's all over. And interestingly enough, some of the things we're seeing will end up being very large markets that serve large global interests. And a lot of them, though, are going to be interests that are very narrow, targeted to specific commercial interests or individual interests, niche individual interests. And that's okay, because the technology is, from a cost standpoint, will enable that. So what we're really excited about and what we see is the ability for even micro-sized markets to have an exchange. So when we think about, and by the way, it can be regulated, non-regulated. It can be futures. It could be options. It could be swaps. It could be equities. You name it. But the range of asset categories is just exploding.
I have two examples of how this bringing price transparency and price discovery to a market, it is beneficial to the economies. And I think hopefully we're in agreement that works pretty well. There's a Central Asian country that approached us about wanting. They have a very developed spot commodities market, but the government there wants to start a futures market because they feel that would enable their farmers to be able to hedge, farmers and consumers and exporters to be able to hedge their the crops that they have there, and the material, and I believe some minerals as well. So a an emerging economy thinking in those ways, seeing the benefits of hedging and being able to give price stability to their really the engines of their economy, I think is really uplifting to me to think about to think about that. There's a small cap exchange in Brazil that is just going live this month, I believe. That is just trying to do small IPOs for smaller companies in Brazil that would then that would be too small to actually put onto the larger markets down there. I think again that's key to capital formation for the country, and we all know that small businesses create, at least in the United States, create most of the jobs. So those are two examples where I get really excited about helping economies, and not to overstate our value or whatever, but helping just at least help bring that to the world.
That's right.
I think that's fantastic. And it's so encouraging to hear, because certainly I'm one of the people who's always been preaching about the fact that there are so many markets out there to build. I think conservatively, we keep a running tally. We reckon there's about 100 markets that are looking to build at any one point in time. And a lot of them are stymied because of cost of technology, cost of regulation, just the cost of getting markets going. It's always a huge problem. I'm very interested, though, because when you talk about all of this range of markets, and you do it brilliantly, you both make it sound incredibly easy, but there are huge differences between them. And I'm just interested to sort of probe a little bit there, because when you look at how a market operates, I mean, even something simple like a stock market and a bond market, and you compare that to any sort of raw commodities exchange, they can have incredibly different market models underneath the hood of the software. That obviously must give you a great deal of excitement in order to manage to build and tweak to those particular markets' requirements.
Yeah, and we built the EP3 from the standpoint that it's an exchange platform. And when I describe what a platform is, I think I always describe in terms of like Facebook is a platform, and platforms expose APIs that allow you to do things with that outside of the core functionality. And EP3 really, I say we sell a set of APIs as much as a matching engine to allow you to access the data and the functionality and to tweak it to the way you want. And that's what I want. That's how I think EP3 will be successful is through their APIs, through its APIs, and not necessarily the core functionality that we have, because we can't predict who's going to come to us. I mean, we've had people come to us with wanting to trade bankruptcy claims. I mean, I didn't know there was a market for that, but people want to do things like that, or intellectual property, so property rights. So yeah, so that's where I think the difference is.
And honestly, there's so much difference between even within the same tradable asset category. There's just so much difference, because, and the fun thing is when innovators come to us, they usually have an idea that something should be traded differently. It could be a traditional asset traded differently than it has been, or a new asset category, and they've got some secret sauce that says, "Hey, look at how we can bring this to market, how we can build a customer base," and it's fun. But I will tell you, even for Jim, who has spent many more years in the markets than I have, it's intellectually challenging. We'll sit down with someone who comes to us and they describe what they're going to do, and you have to take a beat, because you have to think about the market they're talking about, the dynamic of the market they're talking about, what that market looks like today, how will they disrupt it, are there big players in that market who will keep them from trying to disrupt the market. So it's really fun. Is it regulated? Is it non-regulated? Because honestly, as we all know, there's a lot of gray area there. Regulated, we have great regulation in certainly in the United States and many developed countries, but most of it is targeted toward stocks, bonds, fixed income, futures, foreign exchange, and these new asset classes a lot of times just don't fit in to any of those categories. So then, there's a lot of discussion about, is this a regulated market, non-regulated market? So it's a lot of fun. It's very challenging. it forces us to think all day long.
Yeah, and I guess the other thing, speaking of market mechanisms, we do support besides central limit order book, which is really the core. We support auctions because some markets are just not geared for secondary trading. They're not going to do it, but you still need, even if you conduct an auction, you need to have downstream processes and things to process the trades. At the end of the day, they're trades, right? If you do an auction, and we also support RFQ, the RFQ model as well, and block trades as well. So there's knowing that not everything can be put on a central limit order book is something that you have to be honest about, but you can still bring price transparency and price discovery to markets with other market mechanisms as well.
I think those are brilliant points. And I mean, the whole point about market mechanisms, and going back to your point originally that you were saying, Jim, about the fact that Facebook is a marketplace platform. And that's something that a lot of people don't get together. And certainly having spent more than my fair share of going to startup conferences around the world, and remarkably, my hair has always managed to grow back, but I've torn a fair bit of it out when I have to listen to people who sit there and go, well, it's incredible. Airbnb don't own any hotel rooms and Uber don't own any taxis. And it's like, yeah, but you know what? That's because they're an exchange. They might not be regulated by one. And you're absolutely right. The complexities, Maureen, can be incredibly difficult. I mean, obviously, there's certain headliners that I think we all know, such as the fact that you can't trade onion futures in the United States of America, an interesting one for the land of the free, that. And indeed, in the UK, the fascinating issue of dating back to 1720 in the aftermath of the South Sea bubble, that you can't take out life insurance on a third party, which I always thought was a fascinating one as a result of an intriguing speculative market that built up during the South Sea bubble era. Now, someone who is herself a magnificent historian of markets, her question flashed across the screen just a second ago, a doyen of commodities in Chicago. So I suppose from one doyen of commodities in Chicago to another, Maureen. Anne Berg is saying, love the discussion. I'm a huge fan of markets. How do you guard against fraud?
Well, that is a great question. And the challenge, one of the biggest challenges ahead for these new markets is if they don't fit squarely into a regulatory regime, which frankly, many of them will not. Then we see what happens when there's, and crypto is a good example of the messy path to regulation. It's not an easy path. I believe strongly in the importance of reasoned and thoughtful regulation to protect customers, to protect the integrity of the markets. But that would be the challenge as we go forward, is how do we take a very well-developed regulatory format and try and fit new asset categories in them? Because frankly, where there's money to be made, there's also fraud to be had, and we know that. I mean, we can see it. We see it not just in markets, and probably in anything where there's enough money, there will be fraud. There's bad actors. There will be bad actors. So I think the reality is we're not going to be able to stop the momentum of new markets, new tradable assets coming to market. That horse has left the barn. Now we have to figure out how we build some reasoned regulation around these new markets so that there isn't fraud. Because if we don't, and if the market is big enough, there will certainly be bad actors that's just fast life.
Yes, the more you succeed, the more there's going to always be some sort of a problematic issue with fraudsters appearing into that market. And certainly it's very interesting because you're talking about markets potentially all over the world, African commodities, all sorts of things that are happening, multiple different asset classes across the United States of America and so on. And it's really, really intriguing looking at that variation of different markets. So you have the one thing I think that is absolutely obvious, at least to, well, all of us in this studio at the moment, because we see it every day, is just the plethora of markets that are out there waiting to be built with different actors, some of them eccentrically different individuals coming forward to build things, On top of the fact that here we are with the Flash Boys building the 19th American stock options market, which just seems absolutely incredible. Certainly when you think back to where you were in 1975 on CBOE, you're allowed, Jim, to say, I never thought there'd be 19 electronic options markets by 2024.
No, I did not. I got on the floor just as they started listing puts. So that's how old I am. So that's where I was.
That's another great one, isn't it? Yes, they launched options markets, but at first you only had calls, you didn't have puts, and nobody invented Black-Scholes. So actually everybody was somehow or other mysteriously, I don't know, channeling chicken bones in a witch's broth or something in order to arrive at a pricing model.
The one thing I will say about the options market in the U.S. when it came online is I actually think that was the first. The real first opportunity for something we called financial engineering. So going forward at that point, I mean, here I'm an engineer. I'm interested in it, right? I think that was the seminal moment that started the whole financial engineering sort of thing that we're still riding today.
And it's incredible actually when you look at that whole path, because I think there's a huge amount of great nostalgia around about the mid 1970s, and having experienced it firsthand, I've got absolutely no idea why. Because when you look at it, I mean, there were lots of things that were happening that were exciting and wonderful, but we seem to be on the verge of a Cold War explosion. We had far too much polyester in our clothing, and people thought that was still modern. There was this sort of issue of lots of things were happening and developing, but somehow or other they were so unsophisticated to backward. And actually, CBOE's launched, and I hadn't thought about this before, but CBOE's launched, and we were at a point when on Wall Street commissions were still fixed in stock transactions, which is something that wouldn't have allowed Charles Schwab, let alone IBKR, to come out and prosper all those decades later.
Well, I mean, when I walked on the floor at the CBOE, I paid $1 a contract as a market maker. Now I got a free office and I got free beer in the clearinghouse, but I mean, it's $1 a contract, and it was a lot of money. I mean,
no, it's incredible. And you think about it now, anybody can watch one YouTube video and open an account with one of the smaller brokers, and essentially they're going to pay vastly less than that to transact options. It's absolutely staggering the way that whole element of the volume of the market has gone, and that's of course also what's helping drive these new markets and products going forward. So I mean, if we take a step back and we look at the EP3 architecture and what you've got, I'm really interested. What's the thing for each of you that you're most proud of, that you're most happy with, excited about at this juncture?
For me, it's actually the team that we put together in the company. That for me is something that I always go for. And it's somewhat trite, maybe, but that's probably the thing I'm most proud of. The second thing I would say, from the technology point of view, is that when someone comes with a new idea to trade, that EP3 can actually support it. Pretty kind of out of the box. That's not always the case, but that's the thing that, for me, I said, yes, when we thought about this thing, this exchange platform, that's what we wanted. We wanted to be asset agnostic, because we knew that the market, we'd seen, all these different sort of strange asset classes that people were bringing to us. So if we wanted to solve this problem, we needed to solve for that.
Yes, that's fascinating. Sorry, go ahead, Maureen.
Oh, please continue.
No,
carry on.
So for me, I'm a big devotee, I think, of markets. I believe exchanges are so important as a driver of economic growth. And for me, to be able to have a product that I believe is cost accessible, that allows emerging markets, frontier markets, new tradable assets to get to market, to get there in a quick way, a cost accessible way. That I'm very proud of our product, because I feel that it's enabling, and all we need to do is look at some of the very interesting things our customers are doing that will enable some important commercial interests, niche commercial interests. And I think it, for me, it promotes economic growth. So being a big believer in the exchange model, although that model is changing, admittedly, it's changing as all things do. I'm extremely proud of that.
I think that's fabulous altogether, and I completely agree with you. But isn't the interesting part of the exchange model also, Maureen, the fact that it's built to be flexible? I mean, as long as you essentially have that core element of trust and the infrastructure that stands around it, there are a multiplicity of ways in which that market can be envisaged, executed, and ultimately settled.
Right, right, absolutely, absolutely. And I think we're entering a whole new era of thinking about how markets accommodate really a different world, a world that's built not in physical exchange locations, but built cloud native. And so I think we need to think about markets a little, dynamically. And I think in thinking about them dynamically, thinking about them when we see our customers come to us with new ideas and new ways to trade, that dynamism is really incredibly exciting.
Mm-hmm. I agree.
It is very, very exciting at the moment when you can add some price transparency, even if it's simple stuff, just giving people a very simple secondary market or however that works. It seems quite intriguing to me. So let me ask, I mean, one big question. I don't want to make this a trigger warning, but obviously we're now on EP3. And I'm going to guess there was an EP1 and an EP2 that went before it. Is the next step to continue developing EP3 for a long time to come, or does there somewhere along the line in the future, do you foresee an EP4?
Oh, that's a great question. I can give a little history of the numbering of the system. So as I mentioned at Connamara Systems, we were building exchanges for various people as custom solutions. But as it started dawning on us that there might be a market for a product here, we started, a client would come to us and we would say, we would negotiate with them that, about various things. And so we built what we thought was EP1. and it turned out to be that it was too specific for the client. It wasn't really a product. Then we went to, it happens again and again. Finally, we just decided to be EP3. EP4, I don't know. We haven't looked out that far in the future yet. I'm not so sure. It seems to be working pretty well right now.
Yeah. I think our long vision, I think, for EP3 is we have a complete solution. I think we, in each of our modules, each part of our solution, we'd like to make them better. We might like to make them broader, make them faster, make them more. They're all fully integrated, but I think we'd like to go deeper into the functionalities we now have. So we'll, I think we have many years of work ahead of us before we think about something else.
EP4, yeah, for sure. That's a great question though.
But it's interesting.
EP3 sounds good. I mean, it's like EP3.
EP3 isn't easy. It's kind of snappy.
Yeah, it is. It's very snappy. I mean, it's very snappy altogether, and it certainly suggests that there's been evolution. That's the other thing.
Sure.
It's great, rather than being EP1, which suggests that unless the only thing that doesn't seem to evolve is Formula One, I suppose. That's the one thing that stays the same in a certain way. But as we see, there's lots of evolution behind the scenes. But I suppose one of the things that is interesting, though, is because you've got this component-based model, you've got the opportunity to manage to keep revising individual components within it. And you mentioned the fact that you're using a lot of open source componentry and so on, which presumably keeps you very modern and down with the kids, as it were, in terms of the modernity of the system, rather than it being, the matching engine type technology of 25 years ago, where you had this incredibly robust central backbone that then you hung other things off it, and it really was like a very, very old-fashioned chassis.
Yeah, and that was a real point. I think the term these days is microservices, which is component-based architecture is the same way, and you have messaging that runs around. But the fact that we do use open source and we use a lot of APIs will allow us to upgrade technology as we, if something better comes along on the open source world, we'll be able to out with the old and in with the new. It's better, and we've done that in the past a couple of times actually.
Which leaves us at a fascinating juncture because we've got barely 5 minutes till the top of the hour. So therefore, it comes to the point where I think, having had this fascinating discussion about the futures of markets and the future of market technology with Connamara talking about EP3, well, who would like to go first with the epic question? Where do you think the capital market revolution goes next? Will we start the question with Maureen, ladies first?
Well, we've talked a lot about it today, but I can't emphasize it enough that the number of new exchanges is going to grow exponentially, fast and furious, beyond anything that any of us could have envisioned.
Fast and furious. It's not just a case of Dom Toretto and American V8 power. I completely agree with you. There are so many markets out there to be built. Jim, where do you think the capital market revolution goes next?
Yeah, well, the trend we're seeing, and this is particularly among new exchange operators, is that they want to go direct to customer, and they want integrated clearing and risk at the same time. So that's where I'm seeing it going, is the collapsing of that.
Absolutely fascinating. Two very, very intriguing complementary visions of the future, which are showing how Connemara is going to be powering itself forward in many new markets to come. We're so excited to see what your announcements are going to be next. I mean, certainly after that wonderful announcement via IBKR that you're powering the future of a great prediction market, that's intriguing altogether. And I'm sure you've got many more announcements to come in the near future. I want to say a huge thank you. This has been the future of exchange matching engines with Connamara Technology, with its co-founders, Jim and Maureen Downs, themselves, as you can see, steeped in generations of usage of markets, although I suspect that your grandfather was probably using simply a paper and a pen, or indeed a paper and a pencil, I would presume, on a trading card way back when he was a 14-year-old runner all those decades ago. Maureen, this has been a super show this week. I really, really appreciated the opportunity to catch up with you. I'd love to see you again and talk more about markets. We're absolutely on the same page in terms of seeing where the expansion of markets go, because, ladies and gentlemen, as we always say at the Bourse Business Daily Exchange Invest, this is the age of the exchange, and it is the model of e-commerce going forward in regulated and unregulated fashions. It only remains for me to say today not only another word of great thanks to Maureen and Jim Downs for their excellent participation today. Thanks to Claire for coordinating this whole show. I want to say huge thanks to our production team, Janella, Jamil, and Racy. That has been a fantastic show today. Next week, we're going into outer space, ladies and gentlemen. Well, some people might argue I've been there for years. IPO-VID number 153, Finding Value in the New Space Economy. That's going to be a very interesting catch-up with Dr. Armin Papazian, which is actually building very neatly on a discussion we had last year with Mark Wheatley from the City of London, all talking about the space economy there. Looking forward to that show. In the meantime, ladies and gentlemen, it remains for me to say my name is Patrick L. Young. If any of you are driven with excitement of looking to build your new market, then give me a call, because I'll be happy to help you do so. And we will catch you in the Business of Bourses Daily, the water cooler of the exchange industry, Exchange Invest, Monday through Friday. And let me say thank you very, very much to our contributors today, not only Maureen and Jim Downs, but also we've had the joy of hearing from Anberg, Bata Young, and Rushi Rator. That's been your show for today. I wish you all a great week in life and markets. Thanks for watching IPO-VID number, where were we today? 152. My, how time flies.